Welcome to a new DSpec earnings review. In this case, it's from Ginkgo Bioworks, which reported their second quarter 2022 financial results, and the ticker is DNA. The company posted stellar earnings with a total revenue growth year over year of around 230%. They also grew their cell programs by 86% year over year, and they have a pending acquisition of Cymergen and Bias West Sacramento. They have around 1.4 billion of cash at the balance sheet, and they still think that it's enough to continue their runway towards profitability. And they had a lot of recent highlights according to the company. You can have a look at it over here. I won't spend too much time on this because this will be covered later on in the presentation. Let's have a look at the stock price right now, and it's up after hours around 20%. So apparently the investors like the results. So let's jump right into it. You can see over here also an overview about their diverse new programs. One with Novo Nordisk, which is also a well-known company in this field. Therefore, I think it's a good sign that they on the one hand have these big companies, as well as then probably new companies like Bayer or the West Sacramento company for the agricultural part of it. You can see the visual increasement of the revenue, as I mentioned before, around 260% growth. And also this was for the first half of the year, and then the first quarter has been an increase of around 230%. So huge revenue growth, definitely really good sign on the operative side of the business. And this is partly due to the cell programming, because when they have a lot of new programs, which then leads to new revenues in the future. And also if they increase their total active programs, definitely this is always a positive sign. And they increased it year over year, and as well quarter over quarter. There have been 9 new total programs, QOQ, as well as 4 new customers in this quarter. And the foundry revenue has almost doubled or more than doubled from the last quarter, which had around 21 million of revenue. Then on the biosecurity highlight, which is the second main segment of the company, as you can see over here, the revenue has been increasing drastically, definitely also due to COVID and the monkeypox. So I think this might decline in the future. However, in the near future, this definitely will still be a really high number. As you can see, the gross margin is pretty high. So after the numbers you have seen, it's probably not too surprising to see the company increase their full year outlook again, because they already increased it on May 16th. So they increased the numbers for the revenue of the biosecurity segment and the total revenue by quite 50 million, which definitely is a lot. And now they already raised it again, another 50 million. So in total now more than 100 million higher than the initial forecast. And all of it is in the biosecurity part. So this is the reason why I mentioned before, this will in the near future have really good numbers, at least. So now after we've looked at the numbers, which have been really good, unfortunately there are some negative issues as well. And I highlighted over here. In the last quarter, they had stock-based compensation of around 600 million. And for the first half, they had around 1.26 billion of stock-based compensation. So this is really a lot. It's 4 times their total revenue. Definitely really high number. And we jump over to the slide 37, where they outline it again. And down here, what I highlighted is also interesting because at the end of 2021, there was 2.2 billion of unrecognized stock-based compensation expense. And this amount will be recognized over weighted average period of 1.6 years. So in the next few quarters, at least 6, there will still be more of this stock-based compensation, which then negatively affects the not results, but the EBITDA, adjusted EBITDA number. So something to keep in mind. And as you can see over here, they had 650 millions recognized in the first quarter and around 600 in the second quarter. So this means there's around 1.1 billion left. And additionally, there are also remaining earnout shares. So these are tied to different vesting conditions. And in this case, the stock price has to be between $15 and $20 per share, so that these earnout shares will be met as well. And yeah, in total, they have fully diluted shares of 1.856 billion shares. So definitely really a lot, and also a lot of dilution coming due to the stock-based compensations. So this unfortunately is definitely something to keep an eye on. And definitely a negative sign, which I don't really like right now, even though I know this is part of the game. They also gave an update about their acquisitions and with Cymergen, and they expect to close it by the Q1 of 2023, which then should increase their revenue on the one hand, and also have synergies, which then will lead to better margins in the future. They also have a 3-year collaboration with Bayer to advance multiple programs, and as I mentioned before, it's different parts, different segments, which they're now in, which definitely is a good sign that they have wider segments and also different companies from different segments, which are part of the programs. And this is also what they highlight over here. They want to build a base of new customers in this space, and they assume that this will create significant opportunities for growth in the future. Yeah, definitely a good sign, and will be interesting to see how this plans out. As I mentioned before, so the biosecurity segment is really now in the spotlight right now, especially due to COVID and also to monkeypox. And this is a huge tailwind for the company right now, and definitely helps the company to grow and also to gain respect and also new partnerships, I think. So definitely really a good growth accelerator at this stage. And to finish off the presentation, an overview about the adjusted EBITDA. As you can see over here, net loss is pretty high. However, it's mostly due to the stock-based compensation. And if it was not for the stock-based compensation, then they would have around, let's say, 100 million of loss. If we subtract the gain, hold on, it's a loss. Yeah, it almost cancels out, so it's only 20 million of difference for these loss on equity and on investments, and they change in fair value. This, yeah, nothing to really worry about, I think. So then let's jump over here to this slide, and you can see over here they have these operating expenses, which is allocated or not allocated to the segments, and this is due to 607 million to the stock-based compensation. And as you can see over here, this is a huge driver of their growth. They have a total segment operating income, in this case, which is negative, which means it's a loss of 32 million. So it's increasing, or it's decreasing, so it's getting better from last year. This is always a good sign. However, there's still some room for them to improve, and definitely a lot of work to do before they will be profitable, at least for the operating income base. So yeah, in overall, I like the company, especially the growth. Unfortunately, I think the stock-based compensation will drag it down in the near term. Midterm, I'm not really sure if I will be investing in it again in the future, but right now I'm not invested, and I will have a look at it because I think the whole segment and area is really, really interesting, especially what is going on in the world right now, then there will be a lot more companies interesting in the biosecurity part and also on the cell programs in general. I think definitely something to look out, and also want to have a look about the competitors, but I'm not really sure when I will have time to do this. So yeah, hope you enjoyed the video, and until next time, have a good day. Bye bye.